What is going on, penny boys and gals? What's going on, stock traders? And welcome to another trading psychology stream. This is week 4 of our. It's probably going to be around, I want to say, anywhere between 12 to 15 week trading psychology sessions. We might even, renew it for a second, series of 15 classes if people like it, or move on to a different type of topic. I know futures trading was one that a lot of people might be curious in, but for now, right now, we are in trading psychology. This is week 4. And for today, we will be going over a whole bunch of great stuff. So the big topic is going to be risk tolerance and risk appetite, as well as risk perception, which a lot of people don't talk about. So I see a bunch of people in the chat. You know what? Because we got the chat here, I'm going to go ahead and throw the Discord chat onto the StreamYard. So those of you who are watching after the fact actually have something to look at. You can see what the people in the chat live are saying. And if you want to join us live next time, we do this every single Wednesday. All right, I have the screen pulled up. Every single Wednesday at 5 p.m. Eastern here at the Penny Boys Discord. You can find that if you're watching this after the fact, you probably already know where the Penny Boys Discord is because we do post this stream in the Discord. But yeah, I got like I said, a bunch of regulars. We got Chag, Charlie, Nikki. We got Duco posting. They saw Stickman earlier. Vans and Tick. I know Tick's a newer member. We got UV. Who else we have here? Takak as always. Snowflake as always. We got Optimist. Welcome to the class to the chat. Optimistic, that is. OG, Nikki, George, Duco, like I was saying, DH, and Charlie. How are we all doing? We're going to get started. Once again, this is going to be talking about risk perception, risk tolerance, and risk appetite. And I'm going to pull the chat as well on my phone so I can also see it. All right, so today we're talking about a crucial part of risk management that most traders and those who even teach trading often either don't talk about or just look past. And that is going to be risk perception, as well as risk tolerance and risk appetite. You probably heard tons of trading YouTubers, even like myself, talk about risk management. And they, like myself, probably followed it up with risk to reward ratios, diversification, and portfolio allocation, or buying in slowly, all these different little strategies and plans to manage your risk. But that's just the tip of the iceberg when it comes to risk management. In our Trading 201 classes, that's available to everyone here for free and for premium in the Discord. In those classes, we go over what I just mentioned, the typical diversification, risk to reward ratios, allocation, sector diversification, all that good stuff, like the typical things that people talk about when they talk about risk management. However, today we're going to be taking it a step further. So understanding how we not only manage, but also perceive risk is essential for trading the market successfully. In today's lesson, today's class, we'll talk about how perception of risk works, both in trading and just in general. And we'll be also assessing our individual risk tolerance and appetite and learning some effective risk management techniques to keep our capital safe. And like I said before, we have actually 2 trading psychology assessments at the end. I'll be running one of them kind of going off of risk perception. And then Nikki has a special treat at the end that we'll be doing as well, and another trading psychology assessment I'm looking forward to. I know for those of you, everyone here knows Nikki, and Nikki's also not only a trader, but also a psychology major. So she has a lot of knowledge when it comes to this kind of stuff. So let's get started. Let's see the chat, Chag and Duco, when the passing the video goes live. Risk perception refers to how individuals like us perceive and interpret the level of risk associated with a particular decision or action. In our case here in Penny Boys, those decisions and actions are our trades and leads up to us taking, exiting, or passing on a trade. It's a subjective assessment influenced by various factors, including personal experiences, emotions, cognitive biases, like we talked about last week, and the context in which the decision is made. So in trading, risk perception plays a crucial role in shaping our mindset towards risk taking and just our willingness to engage in certain trades. And when I say certain trades, we'll be talking about this later on in today's stream. But we'll be talking about certain assets. Even some people have different risk perception to certain assets like options or crypto or leverage trading or shorting of stocks that might be might be because of certain biases or just certain things that they've heard in the past, or just the way that they're grew up in the trading world. And we'll talk about how that could be dangerous or a good factor, in for us as traders. But Before we get into risk perception, we must first talk about risk tolerance and appetite. These are very important to traders for several reasons. So, risk perception influences our decision-making process, affecting how we assess potential risks and rewards and the actions we take in response to them. So, we're assessing them. That's how risk perception is just how we perceive risk. It's not, whether or not we have a high tolerance to it or a low tolerance. Is how we perceive risk in either a certain asset like crypto versus stocks, or in a certain type of trade like day trading, swing trading, channel trading, fair value gap, whatever it may be, is how we assess risks in certain trades or in certain assets or just in general. But whereas risk tolerance and appetite is how we act on those. So traders with a high risk tolerance and appetite may be more inclined to take on risky trades in hopes of potentially higher returns, while those with a low risk tolerance and appetite may prioritize capital preservation and seek out safer investment opportunities. And I know we have traders who like both, safer investment opportunities. We have a lot of people who are doing the rags to riches, the dividend trading. We have a lot of people who are doing day trading with Ethan, every Tuesday and Thursday at 9:30 a.m. Eastern in the free discourse. We have a lot of people who have different risk tolerances and risk appetites, because we know that dividend trading versus day trading, there are a lot of different risks involved in each. And even dividend trading has a lot of their own risks, especially for people who, like Ethan, prefer day trading. And, for them, someone like Ethan, maybe doing dividend trading might actually not be beneficial because it doesn't fit his personal, trading psychology factors. Some people just don't like holding stocks for too long because, again, it makes them feel a certain way. And we'll talk about all that in a second. Risk tolerance and appetite also influences the actions that we take in response to market conditions. So, for example, during periods of heightened volatility, traders with a low risk tolerance and appetite may be more likely to exit positions or tighten stop losses or tighten the stop loss orders in order to limit their appetite, in order to limit their potential losses. Whereas those with a high risk tolerance and appetite may view volatility as an opportunity for profit and increase their exposure in the market. So I don't know about y'all. For me personally, when I see volatility, I actually prefer to trade during those times as opposed to low volatility. I personally do have a higher risk appetite, higher risk tolerance. I would love to hear Duco, Chag, we have Takak, anyone in the chat. I'm curious if you guys, how y'all feel when it comes to high market volatility versus low market volatility. Are you the type that when there's a lot going on in the market, SPY, whatever's going up and down, everything's going up and down with it? Are you the one to sit out, go be heavy cash during those times? Or are you one to dive right into the market and try to take possible opportunities? Someone's opportunity might be someone else's loss, depending on how they play those trades and how, their strategy and just also their, tolerance to risk plays it all out. Snowflake says, more volatility, please. That's how I am, Snowflake. Yeah, we're in the same boat. But everyone is different and doesn't make one person right or wrong. Hi, fast and quick money, says Takak. I see we got Duco, Stickman, Bat, and Van studying. Yes, love the volatility. Both, I feel like I can't choose. I like it more. Educated. I skipped that for a second, Duco. I'm like, what is that? Oh, I get it now. And that's the thing. A lot of y'all here, y'all understand how to trade volatility because y'all understand either technical, fundamental, and in the high volatility, a lot of it's technical analysis. You understand the psychology behind what's happening when the stocks might be getting overvalued, undervalued, pushed too high, pushed too low, and you know how to trade accordingly and have risk management and your own risk tolerance and all your other factors in mind, which we're talking about right now. So understanding our own risk tolerance, perception, and appetite allows us to tailor our trading plan and strategy. Keywords when it comes to trading is the plan and strategy to align with our individual preferences, objectives, and risk levels. See, a plan that Nikki might have, her trading plan might not work for Takak, and the one that Takak has might not work for Vans, and might not work for Stickman, so on and so forth. Everyone is different. Just because it works for Duco doesn't mean it's going to work for Chag. Just because it works for me doesn't mean it's going to work for Snowflake. And so everyone has a different, ideally should have a different trading plan because none of us are the same two people when it comes to our risk appetite, our risk tolerance, perception, and just all the different other psychological factors, just things that happen to us, in our life, and no two people have lived the same life. And that because of that reason, there's no such thing as two people who are exactly the same when it comes to trading. So that's why you don't want to be following somebody else's trading plan to a T. With our coaches, we teach strategies. We teach a bunch of different strategies because we don't want just, everyone to be following just one person, just trying to do this one strategy that, is guaranteed to work or whatever. You hear all those other traders or all those other Guru was talking about. This is more about teaching everyone how to find these trades or use these alerts and then find how they're going to trade it based off of their own strategy. So Lee might put out an alert and Snowflake might play it one way, Takak might play it a different way, Vans might play it a completely other way, and Stickman might be waiting for the alert to be over and then play a whole different play off of that. And so that's the goal, is to be able to use these alerts almost like a FinViz or like a scanner or a screener, just like an idea maker or whatever, and then be able to use the strategies that we teach and strategies that we also learn just through being in the market, to be able to trade based off of trade those alerts based off of what you personally see in the market and what works best for you personally. Because people who try to force things in the market, just force different strategies, trades, try to force a target level, whatever it may be. Those are the ones who typically end up letting the emotions, lack of confidence or doubt, get the best of them and end up possibly turning what would have been a winning alert into a losing trade. Big moves equals big money, says Duco. So traders with a high risk tolerance and appetite may gravitate towards more aggressive trading strategies, such as day trading or leverage trading, to capitalize on short-term market fluctuations and maximize returns. I know, for instance, when it comes to Penny Boys, we have Ethan and we have Jay. They are, I think personally, two of the traders on our team that has probably a higher risk tolerance and appetite. As far as the analysts go. Ethan being a day trader, he has a very high risk tolerance. He wakes up and he trades just during the morning. He usually is done by mid afternoon, and he calls it a day. And all these trades are I wouldn't call them high risk, but they definitely have high emotions involved. They could for a lot of traders because they're so fast paced. And because of that, the fast paced nature, they do, in theory, carry a higher risk because of the because it's going so fast. But with different strategies, you can lower that risk with confidence. You can lower that risk. So Ethan, he might be trading high risk strategies, but because he has a high understanding of it, it's lower risk for him. Someone like Jay, he loves leverage trading, crypto trading. These are also known as high risk types of trading. High asset or high risk types of assets or high risk type of trading styles, which is leverage trading. To him, he doesn't see it as high risk because he has a plan that works for him and he's confident in it, and he knows how to adjust it when he needs to. And so, yes, it is a high risk in theory approach, but for him, it's not high risk because he has a very high understanding of these things. And then that, this comes over time. And, for those of you who are, just getting into the, the coaching areas, on what week 3 now, it's not like we're going to be learning these strategies in 3 weeks. They didn't learn it in 3 weeks. It's going to take a little bit of time. And then ideally, just like Ethan and Jay, we could, for those of you who have high risk tolerance or high risk appetites in general, you can take advantage of that, the fact that, you are who you are and trade a strategy that works with you, which might be day trading or leverage trading or being in the crypto market. It's just about having a plan and a strategy and a confidence because of having a strategy that you understand. That's, that's the key. A lot of people are trading in markets that aren't made for them because they just don't have the education in markets that are made for them or strategies that are made for them. And so it's just really trial and error and just, finding that sweet spot. So, we talked about people who, have a high risk tolerance, like Jay, like Ethan with the leverage trading, with the day trading, day trading options, with the crypto. On the other hand, traders with a low risk tolerance and appetites may look for more conservative trading strategies, such as long-term investing, swing trading, or dividends to minimize potential losses and preserve capital. So, think about Lee, for instance. He's big into the swing trading, or we have Pookies who does the dividend trading. I know Swinging Bull has a lot of these option strategies that kind of limit your risk or protect your current assets, which is also very, low risk types of trading. So people like that, people who maybe gravitate more towards that, might be more inclined to follow one of their either coaching corners or strategy, for Pookie's, the Rags to Riches videos. So people who like the dividends and long-term investing, you might have a lower risk tolerance. Now there are people who, who have high risk tolerance, high risk appetites, and then they get told right off the bat by somebody, oh, what you should do is get started swing trading. It's the easiest thing to do. It's slower. And yeah, that's not wrong. It is slower and it is in theory easier to do, but it might not be for that person, for that new trader, because they have a high risk appetite and swing trading just might not be best for them. Even though in theory, everyone thinks it's that's the best place to start. For somebody who needs that high pace market, they need that, because if they get into swing trades, they have to hold a stock overnight and they start getting anxious and what am I going to do? And then it affects their trade, their other trade they're in. And just some people just can't do that. And that's okay. You might be geared towards day trading. You've been told your whole life, oh, you need to start swing trading. Well, that might be wrong. You might actually be better off learning how to day trade, but that doesn't mean going on Webull comments and finding the top runner and that's what everyone's talking about and throwing, your whole portfolio into that stock. That's not how day trading necessarily works. What that means is finding a strategy like what Ethan does, or like a strategy that like Ethan's actually, I think, our main day trader. Pookie's has his own. Actually, Pookie's does have a day trading strategy with he uses the bullish engulfing candles, the stocks buddy, like 3-minute, 15-minute stuff. So as long as you have a strategy that works for you, and Pookie's strategy might not work for Ethan, Ethan's strategy might not work for Pookie's. It's just like Jay's might not work for Lee and vice versa. Jay doesn't even look at fundamental analysis, so that his strategy is completely different than Lee, and they both swing trade. Same with day traders. It's everyone will probably have a different strategy or something a little bit different. It's just about finding which one works for you. If you do have a high risk appetite and you need to be in that type of market, you need to be in that type of setting, which is fine. That might be what it is, and and vice versa. It might be the other way around where you want to day trade, but you have a low risk appetite, and so day trading is just not beneficial for you because you're freaking out every single trade you get into just because you're just not made for it. You're just your emotions or whatever it may be, your psychological whatever it may be, is just not made for it, which is okay. No one wants to. The goal is not to force anything. You don't want to force one style because one YouTuber is doing it or because one person told you to do that. That's why we have the Get a Coach channel where you're not just picking whatever coach because I like day trading. Or, I you're going through, and for those of you who did it, you're going through a whole process where you're making you're filling out an assessment. You're talking to myself. You're talking to Nikki. We're helping you find an analyst or a coach who is best suited for you. Maybe not the one that you might want because you might right at the bat say, "Oh, I want a day trade," and then after talking, we realize, well, that might not be best for you. Oh, I want to, or vice versa, I want to swing trade. Well, you can only trade during, between like 9 and your schedule makes so you can only trade during, day trading hours, and your emotions make it so that holding stocks overnight might not work for you. Maybe we try Ethan, and maybe that might be best for you. Van says, I've been swing trading for a few years, but I have been finding that day trading suits me so much better. I can't stand the waiting. And that's me too, Vance. Personally, trichology. And that's how I feel, Vans. And I know, once again, everyone's different. Lee, for instance, complete opposite. But that's the way that Ethan said that, and then Jay's told me the complete opposite. Jay said, I hate, I not hate, but I much prefer swing trading. I'd rather just see stocks be nice and slow and boring and easy, and or however you want to put, whatever words you want to, however you want to call these types of trades, and easy. I know Pookie's here. He always says, easy peasy. What might be easy peasy for one person might actually be really hard for another. And so that's just the goal, is finding what is easy for you, because trading should be, like Pookie's always says, it should be easy. But that doesn't mean that an easy strategy for the dude is an easy strategy for you, or that an easy strategy that Duca works is going to be easy for you. It might be the complete opposite. So by aligning our trading style and plan with how we perceive risk and tolerate risk, we can maintain a more consistent and disciplined trading behavior, increasing our chances of long-term success in the markets. I don't want to work hard for my money twice, right? Oh, you're talking about taxes, yeah. Every trader is different. We all have different attributes. Think of it like a video game. I know Stickman, I know Duca, you're just ridiculously good at video games. I know Duca with the Crunker Strike that we play. But with video games in general, if you have a character that, let's just say, is like an elf, for instance, with high archery and stealth skills but low armor and heavy weapon skills, for example, you would probably choose to use a bow and arrow and light armor and sneak around and shoot people with your bow instead of picking to use heavy armor and a huge sword to try to go toe-to-toe with a bunch of people. Just like if you're a football player who's 300 pounds and you're bad at catching and throwing a football, you probably aren't going to choose to be a wide receiver or a quarterback. You'd probably instead choose to be a defensive or offensive lineman. So just like video game characters and sports players, we all have attributes as traders as well. My elf also knows black magic, says Duca. Skyrim. So that's actually kind of what I was thinking of when I was saying that. I'm not going to lie, Stickman. I was thinking about Skyrim. Elves have a higher tax rate. Which one's the... well, I'm not going to go there. Stealth archer. I like that dude. Tank wide receiver class. Pookie got it. Same page. And a lot of those stem from our trading psychology, those attributes. So if you're someone with low risk tolerance, then maybe day trading, high risk options trading, or meme coin trading or leverage trading might not be the best choice for you until you maybe find a strategy that makes it, or yeah, a strategy that makes it so you are very, very, very confident. But even then, it still not may be the best for you because of the high pace nature or the high risk of, options trading, with the theta and all that kind of stuff. Just certain people just don't react well. It's like being allergic. They just don't react well to certain types of trading. And that's okay. Someone who's allergic to, well, actually, I really shouldn't say that because I don't, I don't react well to gluten, but what I was going to say is, someone who doesn't react well to gluten probably isn't going to eat a lot of gluten, but I don't react well to gluten, but I refuse to let that stop me from eating gluten because gluten is way too good. But if you have a death allergy to to, I don't know, peanut butter, you're not going to be eating peanut butter every day. Just so you get the whole point. So if something just doesn't work for you, don't do it. And through tracking your trades and just through being in the market, that's how you figure out what does and doesn't work for you. And so people who force it are typically the ones that quit within 3 months, which is that huge 90% statistic. I don't react well to being down 20% in 30 seconds. Because it all boils down to stress and impulse. Stress is the conduit for impulse to find its way into this world, and our job is to keep that door as closed as possible trading so we can make clear, logical decisions. Yep. No, it's definitely about just, I think that's like the most important part of trading, honestly, is that door. Figuring out what to let into the door, what to let out the door, figuring out where the windows are, where the cracks are, how often you need to maintenance, how often you maintenance on that door. There's a lot that goes into that door that Pookies is talking about there. And it's not just, technical analysis, fundamental analysis. And that's where a lot of traders, just don't realize it's like, oh, like I'm losing the market. Why? It's like, well, I'm doing this charting thing and it's working. And I just understand why I keep losing. Well, it might be the psychology. I'm allergic to Victoria says I'm allergic to being down 20%. Yeah, I mean, there is that. I'm allergic to day trading and pre-market because I tend to fall asleep by accident and let my day trades turn into not so favorable trades. When you fall asleep in the middle of a day trade, that's high risk. If you have high risk tolerance, maybe long-term swing trading might not be for you, as it might get boring. And that could cause you to sell early or make rash decisions. See, everyone is different. Like I said before, a lot of people might say swing trading is easier than day trading. That's not the case for everybody. It might be for me, it might be for you, it might be for XYZ person, but it's not going to be the case for everybody, and that's okay. Day trading might be easier for you, just inherently speaking, because when you're in a swing trade, it could be boring and makes you want to sell quickly, and then you sell too quickly, and then you see the stock go up, and now you have emotions for your next trade or your current trades, and swing trading might not be the best thing for you. Vice versa, day trading might not also. Really depends on who you are as a person. Triggers the shower instead of napping. And just like sleep, you gotta get one of those those pouches, the waterproof pouches for your phone. Our goal is to use trading psychology to help us determine our attributes, like we were talking before, those video game attributes. In this case, is our trading attributes, and from there determine which style of trading is best for us personally. Remember, if you're struggling at trading, it isn't because you're a bad trader. It's probably because you're just not trading a plan or a style or a strategy that works best for you personally. And I always say this, just like Tom Brady wouldn't do well if he chose to be a linebacker, that wouldn't make him bad at football. He's still one of the greatest of all time. He's just not cut out to be a linebacker. So just because, you might, in theory, be, let's say, bad at day trading or bad at swing trade or bad at whatever, it doesn't mean that you're bad at trading. It just might be that you're not meant for that type of trading. This is NFTs. This is because you probably got it in the wrong time like I did. So how can we determine our own risk tolerance and appetite so that we can better figure out which trading style works best for us personally? Because that's what's important, is matching the style with who we are personally. So one approach is just pretty easy. It's just reflect on your past trading experiences. I mean, note take, when you're done with the trade, just think about it, just assess what happened, assess your emotional reactions to different levels of risk, throughout different trades. Like, oh, this type of trade, I felt this way because, and it had this type of risk level involved, or just see how you feel when you're trading options versus day trading versus swing trading versus long term, to see how you feel personally, not how you're doing in the market, but, like how you feel, is your heart racing during options trades only? Maybe it's because of theta, maybe it's because, there's something there. And it's, these patterns are important to, keep in mind, to just be mindful of, just like when you're, if you are losing in the market, just like a doctor would try to assess the symptoms before figuring out what the problem is. You're not just going to, give up and die. You're going to go to a doctor, and the doctor's going to assess what's going on. They're going to ask you questions. Are you feeling like this? Is this? And they're going to figure out what the symptoms are. That's what we got to do as traders. If we start to falter in the market, is figure out what the symptoms are. So ask yourself questions such as, how do I feel when my trades are in profit or loss? Do I tend to panic or remain calm during volatile market conditions? Am I more inclined to take on additional risk when I'm feeling confident or optimistic? We actually have an assessment we'll all be taking here in a little bit at the end of this lesson before we get into before we get to Nikki's assessment, and then we have the trading trivia. Let me see how we look at the chat. Yeah, we got a good amount of people in here. It's looking like we might do a pretty decent merch prize for this one. As far as the grand prize goes, we do have a few prizes today. And there's a new type of trivia, by the way, for this is the one we haven't even close to done yet as far as the style goes. So the big takeaway here is that the big takeaway here is that it's so important to journal your trades, not only where you bought and sold, but also why you bought and sold, how you were feeling when you bought and sold, and just any emotions you might have felt during the whole process. This is how we grow as traders. I'm working towards a mug hanger. Yeah, now that I know there's different colored mugs, I'm all about it. Let's see. I'm a new type of trivia where the answers are made up and the points don't matter. What, a real computer, dude? How's your neck doing, the dude? Or is your screen in front of you now for the trivia? I saw that. I was like, yeah, he's gonna be looking at it the whole time, looking to the right the whole time. That's a sick setup though. I saw that picture earlier. I moved it. Work is done. I love it. So that's risk tolerance and appetite. When it comes to risk perception, it's a little bit different. Risk perception is the subjective judgment that people make, or just that we make, about the likelihood and severity of a risk. So risk perception is influenced by various factors such as past experiences, age, gender, and culture. Risk perception affects how people deal with hazards and make decisions about risk. So in trading, there are a lot of hazards in the market, in the trades, whether it is a sell-off or bad news or bad earnings, or the CEO got into a scandal of some sort, or the CEO is Elon Musk. There's always going to be a hazard involved there because you never know what can happen. And I love Elon, so don't get me wrong. I'm not knocking Elon. Don't get me wrong. But risk perception often involves using intuition and heuristics, which we talked about last class, to arrive at rational answers. If we were to make content about it, we go viral. It's not sitting in TRA. Yeah, exactly that part. I would not make content about anything else. That's not. As soon as I said that out loud, I was like, wait, that sounded really bad. That's not what I meant. That didn't make it any better. So what this means is that so what this means is that who we are determines how we perceive risk. And that's important to remember. Charlie might perceive risk way differently than Poogie, way differently than Dude, way differently than I do, because we're all different people. We've all been through different. Are we in the lounge now? We've all been through different things. We've all been through different things in life. We've all experienced different things. We've all learned differently from them. We all are just born with different, just natural biases towards things, or not biases, just natural, just feelings towards things, and just the way that we are. Just everyone's different. And are we in the lounge? So some people might look at crypto and think, oh, that's way too risky. It's not safe. It's anti-government, whatever. And for them, it's just something they just don't want to get involved in. Whereas others might look at it and see it as an opportunity. Some might see dividends as an opportunity, whereas others might see it as a risk due to opportunity cost, meaning they are, in theory, losing money by having it stuck in slow-moving stocks, which is what some people think. I disagree personally. But some people think like, oh, I'm losing money by having my money stuck in these slow-moving dividend stocks, making a few dollars, where it could be in fast-moving ones making bigger returns, whereas others sees dividends as opportunity. And you can talk to a million different traders, and they're all going to tell you different theories and different just how they feel about crypto and about dividends. Those are two big ones. In particular, you're going to get a very mixed bag as far as what these veteran traders are going to tell you about each. When you ask billionaires, though, or around millionaires especially, a lot of them will be telling you that dividends are very important. So some see leverage trading as riskier than others. Some see shorting as riskier than others. Everyone's different. So for example, like I said before, Ethan sees swing trading as risky due to having to hold the stocks overnight, where anything could happen overnight and you can't sell. Like any of those things we talked about earlier. The CEO or earnings or whatever, and you might not be able to sell. Whereas Jay sees day trading as risky due to the fast-paced nature of it. You look away for 10 seconds. You take a nap by accident during pre-market like I do, and you're down, 80% by accident. Boom, not by accident because you fell asleep. But everyone's different when it comes to their risk perception. Ducks and dividends are a risk doo-doo. But yeah, I mean, that's the thing. Like, Pookie, you're saying I'm just going to make 500 a day for the next 40 years. But like, that's with dividends, it's going to take a lot of money to make 500 a day. And so people see that as like, oh, I could just be making 500 a day in crypto, or I could be making 500 a day in options trading. Everyone is different when it comes to their perception of that. I know we have a lot of analysts here who don't trade dividends. We have a lot of analysts here who don't trade crypto. You ask Jay, why is this person not trading crypto? He's going to tell them like, oh, well, that's a silly decision. But then you ask Pookie, and Pookie will tell you, dividends is, the way to go. Everyone's going to tell you something different because everybody is different. Like Ethan sees swing trading as risky and Jay sees day trading as risky. People will never call you silly for wanting to trade crypto. Even if it's, I guess crypto, even if it's a derivative of crypto, even if it's, I can't say this, even if it's Moonbirds, but without the bird part. And for those of you who know what I'm saying, I can't say this because we're not in the lounge, but, so yeah, everyone is different. So let's consider some examples of how risk perception influences trading behavior. So we'll imagine two traders. Charlie knows. It's like the ongoing. I think every week we just had to bring it up in one way or another. Snowflake actually has one. So let's consider, for example, we have two traders, Mark and Sam. Both are considering investing in a volatile tech stock. There's a volatile stock in general, or a volatile crypto asset, whatever it may be, something volatile. I don't get it. Can someone? Mark perceives the stock, this high volatile tech stock, as high risk due to its volatile price movements and uncertain future prospects. The same could be said about crypto or whatever it may be. As a result, Mark decides to avoid investing in the stock altogether, preferring safer investments with more predictable returns like swing trading or dividends. Moon Richards. I like how the chat's up on the stream too, so everyone can see what y'all are saying. Or for those who are watching after the fact, or anyone on YouTube for that matter, can see what y'all are saying. Let me make sure that's actually true. All right, good. Sam on the other, so the moon is not me. Jeez. Sam, on the other hand, perceives this high volatile tech stock or crypto, whatever it may be, as an opportunity for high returns. So despite the risks, despite all the risks, Sam's confidence in their analysis, in their risk tolerance, and in their strategy, trading this crypto or this high volatile day trade or whatever it may be, leads them to invest a portion of their capital, just trade the stock or crypto, accepting the potential for greater volatility in exchange for the possibility of, in theory, greater returns. Sam and Mark, two different people, different risk perceptions and tolerances. These examples show how risk perception can vary from one trader to another, as well as tolerance, and influence our trading decisions. Opportunity. Neither trader is right or wrong. Mark and Sam. Mark and Sam are neither right or wrong. Mark has low risk perception, and because of that, they pass on the stock. That means they follow their plan and decided instead trade a stock that better fits them as a trader based off of their risk perception and trading psychology factors. So maybe they went and traded a dividend or a swing trade or a rest and retire on our long-term investment newsletter. Maybe they traded one of those trades instead, and they made money because that's just what they trade better. And that's good for them. That's a good thing. Sam, on the other hand, has high risk tolerance and decided that this trade fits their trading style and plan, and maybe they made a lot of money off of this play because it fit their style. That they were confident in it and they traded it effectively. Both traders here follow their plan. If the stock goes up, let's just say, like we said before, if the stock does go up, this doesn't mean that what was his name, Mark? It doesn't mean that Mark is wrong. Let me see. 1 second, just reading the chat here. Mark has 20 watermelons. Sam has 4 cantaloupes. So, like I was saying, both traders here did follow their plan. So the stock goes up. It doesn't mean that Mark was wrong for not buying the stock. Had he gone into the stock because he has a low risk perception and this is a high risk stock, he could have made mistakes here. Even if the stock went up, maybe it went down first and then went up. So maybe he over allocated because he just doesn't know how to trade these types of plays, or he was panicking and he put too much money in, or he panic sold too early, or he let his emotions from this trade affect another trade because he's just staring at this trade, panicking. Even though it's in theory a winning trade for Sam or whatever the other guy was, it might not have been a winning trade for Mark because that doesn't fit his style, and he doesn't have a strategy for it, and he's just guessing and checking and hoping, and that's just not how successful trading goes. That's how emotional trading goes. This is so many things that can go wrong when you go against your plan or your style and just trade outside of your risk perception and your comfortability level. Let's say Mark perceives a blue chip stock. Let's say Mark perceives a blue chip stock. I saw moonshine on there. Terry says he has moonshine. So let's say Mark perceives a blue chip stock with stable performance and a history of consistent dividends as a low risk investment opportunity. Despite its modest growth potential, Mark values this stock and the predictability offered by the stock as something that he values it highly. He likes that. Therefore, he decides to allocate a portion of his portfolio, just basically buy this stock. He prioritized capital preservation and steady returns over the possibility of a higher but riskier investment like that high-tech stock that we're talking about, the volatile one or the crypto stock. On the other hand, put it in reverse, Terry. Oh no, I've never seen that one. On the other hand, Sam sees the blue chip stocks, or it might be, and let's just say Sam sees the same blue chip stock that we were just talking about as too conservative and lacking in growth opportunities. So despite its stability, Sam believes that the stock's limited upside potential does not justify the investment. Instead, he prefers to allocate his capital to more dynamic and growth-oriented assets that offer higher potential returns, even if they come with greater risks, like your tech stocks or your crypto. Therefore, Sam decides to pass on the blue chip stock in favor of more aggressive investment opportunities. Once again, neither Mark or Sam are wrong here. They both follow their plan based off their risk perception. If the stock goes up, that doesn't make Sam wrong for not buying the stock. Had Sam gone into this stock, this blue chip stock, because he has high risk perception or just high risk tolerance, high risk appetite, this is what he needs, this slow moving stock might have caused emotions to kick in, such as boredom, anticipation, FOMO, and just, for FOMO from having the funds locked up. And because all these emotions, it could have caused him to panic sell early or let the emotions of this trade get the better of another trade or the next trade, or just have his emotions just get the best of him in general and let this, what could have been a winning trade, turn into a losing trade because, sure, Sam traded this perfectly because Mark traded this perfectly because that's his plan, that's his strategy. But Sam could have made that same winning trade into a losing trade because of his emotions. That's because he was trading outside of his comfortability level, outside of his strategy, outside of his plan. So it's all about finding what works best for you. My mind don't. Understanding our risk perception can help us better understand why you might be feeling certain emotions during certain styles of trading. It also can help us realize that there might be certain assets or styles of trading we are missing out on due to our risk perception, like those who see crypto as risky, for example. I know for a while my risk perceptions towards options trading was high, meaning I thought that it was high risk and I stayed away from it. But over time, I educated myself on the subject and just how to trade it, and I realized it wasn't as risky as I initially thought. It would have been risky had I got into it without education. But with the education, with knowledge, I realized, this isn't so risky because I know what I'm doing now, starting off small. And with the right education, I was able to make a pretty good amount of money trading options. So understanding your risk tolerance and appetite helps ensure that your trading strategy aligns with your individual preferences and personal style. It also allows you to tailor your approach to risk management, position sizing, and asset selection to match your comfort level with risk taking. Primitive fear of shaking bushes directly correlated to the size of the bus. That's fair. It also helps you find other areas you might be missing out on due to an unneeded perception of risk or just your biases or whatever it may be that made you feel that way. Trading can be emotionally challenging, especially during periods of market volatility or drawdowns. So by knowing your risk tolerance, you can avoid taking on more risk than you can handle, which reducing emotional stress and anxiety associated with trading. So risk tolerance also helps determine the level of risk you're willing to expose your trading capital to, as your portfolio to. By staying within your risk tolerance limits, you can minimize the risk of significant losses that could jeopardize your trading account and long-term financial goals, or just, just what you're trying to do here in Penny Boys and trading, just, what your trading plan and goal is. As Pookie's definitely knows, and anyone here who's been doing this for a while, consistency is key to long-term success in trading. Emotions kill consistency. So knowing your risk tolerance allows you to establish a consistent and disciplined approach to risk management and trading, which hopefully will reduce the likelihood of impulsive or emotionally driven decisions or trades that could lead to losses. So understanding your risk appetite helps you set realistic expectations for you and your trading performance. Once again, you and your trading performance is based off of you and your risk appetite and you and your trading psychology. Just because trader A is telling you that swing trading or so that day trading is not good for you, or the options is not good for you, crypto is not good for you, it might not be good for them. It might not have been good for them when they first started trading. It does not mean that it might not be good for you. With the right education, it could be good for you. And so just keep that in mind when it comes to, your personal trading psychology, just you and you personally. That's why we have Ethan as a day trading coach, where, we let people go and trade with Ethan if it makes sense. And that's why, once again, we have that Get a Coach system where it's, where it's not just, oh, hey, have a coach, we have coaches. Yay. Good for, just, no, we want to make sure that you find a strategy that works for you through the coach. The coach is the conduit. It's the strategy that really matters. Oh, geez, the dude. So this all enables you to evaluate potential risks and rewards more accurately, which leads to more achievable trading goals. And that's huge, is having an achievable trading goal for yourself, for your emotions, for your portfolio, whatever it may be. Like some people might see, not to call you out, but Lee or Pookie, posting those, on Facebook, those big profits with, I made $7,000 today or whatever. You might be thinking like, oh, like I'm not doing that. Like I'm a terrible trader. That's not the case. It's all about the percentages. And Lee has a very big account that he's trading with, and so for him, making $7,000 might be the same for you making $7 as far as the success of that day goes. And so it's really important to have an achievable trading goal for yourself. Just because you see one person on YouTube or whatever saying, oh, I do XYZ and this is how much, it does not mean that it's going to work exactly for you. And so have a goal that works for you and a clear understanding of the challenges that you may face. And it's a lot easier to do that when you have coaches, people like Pookie, Lee, Ethan, Jay, Bull, here helping you and, with their strategies, not just like, oh, here's a strategy, good luck, never going to help you again. These people are here to actually help you, not just understand what it is, not just learn it, but like really practice it. And, if for those who are in the rags to riches, every Friday, I believe it's 11:30 a.m. Eastern after your live trading, Pookie does his Rags to Riches team chat or team session where he has everyone kind of just go over using this spreadsheet, what they traded for the, for the week or for the month or whatever. And, whatever it may be, for that period, I guess it's weekly. So for that week, and, really discuss it, see, what went wrong, what went right. Are you following the plan? Are you not? And it's really about having that accountability, to get that achievable trading goal. So we're about to get into the trading psychology. We have two quick things first. Let's make sure Nikki's still here. Good. All right. So the first thing, I'm just curious. This is I got some questions here. They're yes, no questions. You can, if you want, say yes or no in the chat. But I'm kind of be like speed rounding through them. So just in your head or just, on your fingers or whatever, I would like for you to count how many of these questions that you personally say yes to or said yes to in your head or out loud, whatever. So I'm going to say a bunch of questions and you say either yes or no and just count how many yeses you get. All right. Snowflake says 7. That would be a good answer, Snowflake. Actually, there really doesn't. Actually, there's no right answer here. So here's the first question. This is yes, no questions, and every yes, just put a finger up. Do I feel a sense of excitement or adrenaline when making high risk trades? This is question number 2. Am I more likely to enter trades with higher leverage or larger position sizes? Do I find myself actively seeking out volatile assets or markets for trading opportunities? Do I tend to hold on to losing positions in the hopes that they will eventually turn profitable? Am I comfortable with the idea of experiencing significant fluctuations in my portfolio value? Do I have a high tolerance for uncertainty in my trading decisions? Do I frequently engage in speculative trading or invest in speculative assets? Do I experience emotional highs and lows based on the performance of my trades? Am I willing to accept the possibility of losing a significant portion of my trading capital for the possibility of gaining a big reward? Do I view market downturns or corrections as buying opportunities rather than causes for concerns? Do I often find myself taking impulsive or spontaneous trading actions without thorough analysis? Am I more likely to trade based on intuition or gut feeling rather than following a structured trading plan? That's a big one. Do I have a history of experiencing large swings in my trading account balance? Another big one. Do I tend to focus on the potential rewards of a trade rather than the potential risks? Got a few more here. Am I willing to take on additional risks to achieve higher returns in my trading activities? Do I find myself feeling anxious or restless when not actively engaged in trading? Am I comfortable with the idea of experiencing short-term losses in pursuit of long-term gains? Do I enjoy the challenge and excitement of navigating uncertain market conditions? Am I more likely to deviate from my trading strategy or risk management rules during periods of heightened market volatility? Out of fingers. Do I have a tendency to downplay or ignore potential risks associated with my trading decisions? All right, so don't put it in the chat yet, but just keep type in the chat or don't post it, but just keep numbers. Just keep a tab of how many yeses you had. So write it down somewhere. We're going to do one more set of questions, and we're going to do the same thing, yes or no questions, and then we're going to see the comparison of how many yeses you had for the first set versus the second set. Victoria says, and toes. All right, so here's the second set of questions. So make sure to write down, just in case you forget, because there's going to be a lot here. Write down how many yeses you had for that first set, and here's the second set. And once again, yes or no. We're self-measuring. Do I feel anxious or nervous when making trades, especially those with higher levels of risk? Am I more likely to trade with lower leverage or smaller position sizes? Do I prefer to avoid trading in highly volatile assets or markets? Do I tend to cut losses quickly and exit losing positions to minimize potential losses? Remember, keep track of the yeses. Do I prefer to invest in assets or markets known for their stability and predictability? Am I uncomfortable with uncertainty and prefer to have a clear understanding of the risks involved in my trades? Do I avoid speculative trading and instead focus on conservative investment strategies? Do I strive to maintain emotional balance and stability regardless of the performance of my trades? Am I cautious about risking a significant portion of my trading capital on any one trade? This is all spec. Do I view market downturns or corrections as potential threats to my portfolio rather than opportunities for profit? I just lost my spot here. Do I make trading decisions based on thorough analysis and research rather than intuition or gut feeling? Do I adhere strictly to my trading plan and risk management rules, avoiding impulsive actions? Do I aim to maintain a consistent and steady growth, like the rags to riches, when it comes to my trading account balance, the trajectory of my trading account balance? Right, Poogie? Do I carefully consider both the potential rewards and the risks of a trade before making a decision? Am I hesitant to take on additional risks in my trading activities, preferring to prioritize capital preservation? Do I feel content and at ease when not actively engaged in trading, rather than restless or anxious? Am I uncomfortable with the idea of experiencing short-term losses, even if it may lead to long-term gains? Do I prefer stable and predictable market conditions over uncertain and volatile ones? Am I disciplined in sticking to my trading strategy and risk management rules, even during periods of market volatility? Last one, do I actively seek to identify and mitigate potential risks associated with my trading decisions? All right, so now I'd love to hear both of y'all. We have both the answers to number one, number two. How many yeses you get for one versus two? So just put the number one versus number two. So 5 and wow, Charlie, that's interesting. 9.5 and 13, 6 and 11. Actually, everyone looks like. All right, so yeah, Tick says 10 and 11. Looks like most people are higher on the second one. 14. Okay, so 14-10. So there's the first one where 69. Duco, your name. Takak got 10-6. Okay, so Takak and Victoria so far the only two who got more on the second side. I got more on the second side. So that first side, those 20 questions, those who got yes, it indicates a higher risk perception, a higher risk tolerance, and a higher risk appetite. Those who got yeses for the second questions, that means you have higher or lower risk perception, appetite, and tolerance. And some people might be a mixed bag where you might have a high risk tolerance towards some types of aspects of trading, and vice versa. Taxes, I don't like this game. So this is good to it's good to know, if you are like a 10-5 or a 5-5 like Charlie. If you're a 5-5 like Charlie, then maybe you are a well-rounded trader who might benefit from both day trading, swing trading. You might not, not benefit, but you might not have any negative effects of either or when it comes to your psychology. Whereas somebody like myself, who let's just say I got I forgot exactly numbers, like let's say it was like 15-5 or whatever. For me, maybe the low risk perceptions, low risk tolerant types of trades might not be best for me. Maybe I might be better inclined to do the high risk tolerance trades. And if I do those and they still don't work out, well, either A, maybe I don't have the right strategy for it, or B, maybe I got to figure out ways to lessen the emotions I currently have. And so I get more yeses on the second hand side, whether that is, because people can over time, figure out how to have more or have less risk, or have more or less risk perception or tolerance. I can count. I describe all the words. Snowflake. I'll grab a paper, run it back. Duck, no. This is recorded, though. All right, so we're going to talk to Marriage now. All right, so now, Nikki, are you there? Really quick, I am going to end the recording because we won't be able to hear you, Nikki, on StreamYard. So for those of you who are listening after the fact, thank you all for listening here on YouTube. We do this every Wednesday, 5 p.m. Eastern. We hope to see you next Wednesday. Until then, we hope that y'all make some bread.